Good morning, everybody. It's Tuesday, the 10th of December, 2024. I'm Jeff Fitzpatrick, and I'm afraid 24 hours late, it's time for my weekly video log. I think it's still worth watching. And in this edition, I'm going to look at the trading strategy that I've been pursuing over the last few months. I know it's working, but I now want to show you some figures to demonstrate how well it's working. Then we'll look at my trades for the week and how I identify them, look forward to the conference coming up, and then a little roundup at the end. So let's get cracking. Well, here we have the puts. If you recall, the basis of the strategy is one, to sell puts close to the current price, or in fact, if we can, below the current price. In technical terms, that's called at the money or out of the money. And also then to use the cash that we generate to buy stocks rather than to sell puts to obtain them. And this is sort of where we're at present, December. You see Diamond Club there, there's 26,000 plus in the pipeline and so forth. And if I carry on scrolling down here, we come to November and October, obviously right through. I started the policy in July. Unfortunately, I didn't actually start putting together this combined list until August. And I've combined that with some other information, which you've seen before, but just switch it to the report card for the clubs. So what I've come up with is this. Well, first of all, the put income from this strategy has been across the clubs 335,000, nearly $336,000. So it's certainly brought a lot of income in. I don't think it would have brought more in had we stuck to the original policy. There have been 242 put trades, and interestingly, of those, 36, only 30, in fact, 37 were put. And what I've also been looking at is when these trades expire. So I've got 20% of the trades that were set for the middle of the month, for the monthly expiration date, got put to us. That was 36 out of 178, which isn't actually a bad result. But if you look at the weekly expiring puts, they tend to be at the end of the month or the beginning of the month, and there have been 64 of them, and only one got put, 1.56%. Traditionally, we've said that stocks reduce in price as we come towards the monthly expiration date, and that seems to be the case. So by selling puts with expiration dates at the end of the month or the beginning of the month, we avoid that, and that seems to be working. However, not all stocks offer weekly expiration dates, so we can't do it all of the time. So overall, there was a 13,000 plus of loss and 335,000 of gain. So a net of 322,000. And in the losses came 5 in August, 4 in September, 1 in October, and 3 in November. Some of these are what I call legacy trades. They're trades that we entered before I changed the trading strategy, and they were then rolled forward to avoid them being put to us. So the pattern is reducing. And I think that actually still applied in November. But as we move forward, there won't be any legacy trades. So below that, for the clubs where I've got the data to hand, during September to November, so that's the full month, September, October, November, 3 months, this is how much we actually increased the value of them by. So Diamond, for example, went up by $79,000, of which 44,850 came from put income, so 56%. If I go down the list, you can see the others. In the worst case, it was a 100th millionaire. Now, 100th Millionaire is a club that I really don't have complete control of. So I don't think I've actually fully implemented the strategy there. And I can see that the result is there. Nonetheless, they've done pretty well. A very good increase for that club, 90,000. Second only to Sapphire, in fact. So overall, 50% plus of the income that we're getting comes from selling these short-term at or out of the money puts. So I think we'll be continuing with them. So let's have a look now at my trades that I'm setting up for this week. And first of all, a look at how I get to them. So I'm now looking at the trades that I seek in three different sectors, really. Short term, quick trades in and out, and then medium term, where I'm prepared to stay in for up to 3 months or so, and then long term, where it's 6 months generally plus. And I use slightly different criteria for them. So the short term ones, first of all, I'm looking at analysts upgrades, and I get that from Zacks. I also use the Zacks screening that combines fundamental analysis and technical analysis and pulls out the top 12. However, of the upgrades, I think there were probably about 20 of them, only three got through. And that's because I also looked at them in terms of the charts and in better investing terms too. None made it through from the fundamental and technical analysis. When I go to the medium term, I'm looking at the current 4x4s and 3x4s from TICN, and a couple of those did actually make it through. Where I've got these highlighted in green, they're through. Where I've got them highlighted in sort of mustard color, then they are good, but not quite ready. I also looked at value line screening for one for timeliness, one or two for safety, and at least B plus for financial strength. None of those made it through. Then I looked at the existing stocks that we were in around the clubs, and there was only one that I still liked that didn't come through on the rest of the analysis, and that was AstraZeneca, AZN. And then I go to, and I also look at those in terms of better investing and also Zacks. So, a lot of these got thrown out on those parameters. Then I go to better investing itself and I look at their predefined lists for value, small businesses, quality plus dividend payers, and quality businesses. And quite a few of those made it through. They also then checked out with Zacks and checked out with the charts. I also then brought in Stockmaster, none made it from there, and also the Zacks Value Screener, three made it from there. In the long term, I'm looking for really good stocks at low prices that pay high dividends. And it's not surprising that nothing got through. If some gets through there, that'll be really good. So I think it's worth looking for those, but not, I don't expect to find many. If we do, it'll be a flags up day. So that's where I'm finding these stocks. And if I then go to this screen, you can see the actual picks. And it's really just this top section. So I've looked at the current price. That's just today's date. It updates automatically. I found expiration dates again from what I've said earlier. I'm really pleased if I find end of the month rather than middle of the month dates. Uh, I've then looked at the strike prices and the premiums, looked at the percentage that gives, how many days to expiration. I did this yesterday, so it was one day more than this. The stock buying power used, the return on investment, the annualized return on investment, and then something I've called headroom. So by headroom, if we look, for example, at ADUS, we've got a strike price of 115, but the current price is 120.72. So that stock could fall over $5 in price before it got to the point where it would be likely to be put to us. And that is 572 in this case. So they're all sort of at or below. And again, I like ones which have got a decent bit of headroom. Obviously, if you look at those in percentage terms, then they might not be so fantastic, but I want to know what the headroom is. It's part of the selection process. I've then ranked them, and I rank them actually on annualized return on investment, and off I go then to trade. The ones I trade first are at the top of that list, and the ones I trade later are at the bottom. Where the stocks where the stocks are either not optionable or there's no worthwhile premium at all, then I look at the stock as a potential buy. So I put in the current price and I find the next strong point of resistance. That's the target. And it's a buy. How much gain would I get and what's the percentage gain? And then obviously I didn't need to rank them, but I went for SPNS first, NCNO first, and TCAHY last. So that's my picks for the week, and that's how I find them. And next, advanced notice of our conference, 21st, 22nd, 23rd of March in Dublin at the airport, and what we're going to be covering. So we're going to be covering this whole question of seeking out 10% per month in gains. We're going to look at an update of the TICN 4x4 scoring system, a revised monthly dashboard that we send out to make that more user-friendly and useful. And we're going to introduce automatic screening for TICN high scoring stocks and some additional screening tools. I've got special guests joining us direct from the USA. There'll be some live trading and trade management, and I'll also be giving out some trading templates, including trading records templates. So there it is. We're at the Carlton Hotel, Dublin Airport, 21st, 22nd, 23rd of March, and booking will be available within the next week or two on the myinvestmentclub.co.uk website. So book early, there are limited places. And don't be put off if you're a beginner. There will be special sessions within the event for those new to trading to help get you up to speed as quickly as possible. Facebook's going well. Thank you, those of you that have joined it. If you haven't yet, search for it on Facebook, The Extraordinary Trading System. That's the group name. And if you're not already a member of one of our clubs, check out myinvestmentclub.co.uk. Lots of information there. Tells you how you can put in just £100 a month or any amount above that. And we do have people, plenty of people putting in 100,000 and a lot more than that. And you'll also find out how the clubs work and how they're doing. And I think that's about it for now. So I'll talk to you next week. Thanks very much for listening.